Hello friends, welcome to my channel and thanks for watching this video. Friends, in this video I'm going to talk about something unusual in the current market situation as I am recording this video on 12th of March 2020 where global stock markets are on a tailspin and we are seeing some kind of mockery of in stock market because generally it does not happen that an index or a bond fall like an small cap companies where whenever some bad news came like 3 4 5 20% up or down, so these kind of movements are happening. But the thing is, and there is a sense that recession is there and all those kind of things, but can we actually say that there is a recession because of this coronavirus issue and which leads to global slowdown or in most of the countries? And actually there are some indications that some countries are indeed on a brink of recession, but is an actual recession yet? I'm not saying that there is no probability. That's why foreign banks are taking central banks are taking such drastic measures, as well as the government of different countries. But the thing is, right now they are safeguarding because the measures they are taking is not only uh, I don't know how much it will help, but it will what they are taking, that closing down the economy just to save their country and all those things, will lead to further slowdown. And on the another hand, the central banks of that same particular country or countries, they are sloshing the market with liquidity, with fiscal and monetary policies, and loosening out the fiscal policies or monetary policies. In some country right now, monetary policies, not fiscal policies. But so what will happen with these kind of measures, that whenever there is a sense that there are enough liquidity in the market, stock market will move on like anything. The way it is falling down justified, but it will move on like anything because there should be a sense, or there is a basic understanding that when interest rate goes down, stock market goes up and vice versa. So obviously there is a situation which is creating this kind of slowdown, but I'm not saying that there aren't some bad things, but there are no recessionary signs. I mean, in terms of stock price movement yet. Why I am saying this? This is a Dow Jones monthly chart, and it's a long-term chart. If you see, this is a long-term trend which in across since 1980 to this trend is 1980, and there is a low in 2008. But if I just increase, extend or zoom out this chart, and you will find that this is the high. You'll find that there is an intermediate trend which is going on in the market. So the next low is around 16,000 if it is intermediate trend indeed break. But if you just check, you will see that indeed there are some severe falls. I don't know how much it will extend, but you will see if I just extend it and zoom it just to show you, you will see that the trend is still intact. I'm not trying to be, a very big investor or somebody, but it is just take it as an observation and for research purpose only. The trend is still intact, and it will definitely go down to 1,000 1,500 points more on the downside. It is indicating 22,000 odd. But indeed, if it is, or you can take this low as well. If I just, do this chart and pull up like this, then this will be more justified because a trend has been created, and you will see there is, you will see at around 21,500 to 700. So the trend is still intact, and I'm just simply saying on the basis of trend, and when there is ample amount of liquidity and things are loosening up, there would be a sense that when things come back, it will come back like a very big thing. So you should be know and informed about this. Right now everything has been liquidating, but whether it will turn into a stock market crash like 2008 or all, I am not the right guy to say on that. But what I'm saying that the trend is still intact here. So this is about Dow Jones. I just I also want to take the example of Nifty 50 because I belong to India. So obviously I will take that example. And so first thing first, that this is the range which has been broken in the year 2003, and it went up. So if I take these two support lines, if I take here, or if I probably take the weekly chart, you will get a better picture over here. Yeah, so here you will get a better picture that there is a breakdown, and I'm saying these are just levels. There is a breakdown, and you know there is a breakdown here, no doubt about that. But we'll see that these breakdowns, there are supports in like 2000 and 9000 level, or 8950, in between 9000 to 5. So this support line what I'm talking about, indeed this trend line has been broken down, and broken down very sharply here. But this is the trend line which I am talking about. If you see here, yet to be broken. If it indeed broke, then we obviously look for the range of like 6000 or 7000 odd, in between that. But there is a sense that with the economies where central banks are taking such decisions, where things are going like there are lots of liquidity into the stock market, which will come, interest rate will be again be lower in a very short amount of time. So I have this theory from past 2 3 years. I thought that it will happen in to this interest rate will go down in 3 year of span of time, but the current market suggests that it will go down in like within a year. So that's why I bought in this theory, where I am suggesting that, or what I'm looking here is that there is a bull market ahead, and I don't have any doubt that with central bank and pushing the liquidity up and interest rate down, there will be some kind of you know action which we are about to see on the upside. It obviously, I'm just talking about the levels, I'm saying it multiple times, just talking about the levels. But things go on both the sides, so there is a sense that this will happen. So this is a small video which I want to share with you. Thanks for watching this video, and take care of your family and friends.